Today is Monday, June the 27th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Steve Freed, ADMIS Vice President of Grain Research, and Alan Bush, ADM Investor Services Senior Financial Economist. Starting with the financial markets this morning, Alan, what will Fed Chair Powell say on Wednesday at the conclusion of the European Central Bank's three-day forum?
Well, I think he will probably repeat what he has said as of late. Their main focus from the Fed will be on inflation. He will probably hint at another 75 basis point hike in interest rates at the July 27th meeting. And I think he'll also talk about the plans for a soft landing, or at least his hopes that there will be a soft landing in the economy. This seems to contrast a bit with what economists, or at least some economists, are saying, that they're looking for something a bit harder. But I think Powell will try to strike a balance between hiking interest rates and searching for the right balance to have a soft landing in the economy.
Alan, looking at the inflation situation, are there indications that we may be seeing peak inflation now? And how could that affect stock index futures?
I think there are a lot of signs that inflation may be peaking. We are seeing the commodity prices, the industrial commodity prices, coming down substantially as of late. Even copper at the beginning of June was at $4.60 a pound. It's here now about $3.75. Energy markets coming off, crude oil, natural gas, gasoline. So I think that is an indication that the economy is slowing, and that would suggest less inflation, and less inflation could prompt the Fed to be not quite as hawkish this year. And that in turn, it's a long chain of events, but that in turn then would be supportive to stock index futures. So signs are looking a bit more encouraging that we are in the process of bottoming, or may have bottomed, in the stock index futures.
Alan, you talked about another 75 basis point increase coming soon. What's the outlook for the interest rate futures market in general? Is that already built in?
Yes, it is. I think it's totally factored in. In fact, the question remains, what will the Fed do later this year as far as policy in light of the economy weakening, not just here in the U.S., but globally? In fact, it now appears that we are likely to see the peak in interest rates in December of this year, and that has been pulled dramatically forward from just a few weeks ago for March of next year for a high in interest rates. So it does look like a lot of the bearish news is factored in, and I think traders can be looking for probably better news as far as the fundamentals, with a weaker economy being supportive to the interest rate futures market. So I think interest rate market futures will probably trend higher across the board from here.
Thank you, Alan. Steve, grain futures continue to trade lower. Why? And do you feel the trend will continue?
I think we've seen soybeans on the September contract drop from $16 to the recent low of $14.30. Corn is lower overnight. It's dropped $1 from $7.50 down to almost $6.50. And the wheat market in Chicago, it dropped from a high in mid-May of $12.85 to today's low of $9.22. And I think that there were three reasons. Number one, the weather has been pretty benign across most of the Midwest versus expectations earlier this year of a warm and dry pattern, especially in the Western Corn Belt. There's also been a lot of headlines about trying to get some grain out of Ukraine and the Black Sea, even though it's not happening. And then there's recession talks. And most commodities are lower because of concern that a recession will reduce demand for commodities, especially going into China. Last week, I think some weather meteorologists began to give up on this ridge of high pressure. And so they think that prices could continue to leak lower into the summer months. And funds now are pretty much out of their long positions in the grains because of recession.
Steve, there's some USDA numbers to be released this week. What's the market expecting from this, and do you think they'll move prices?
Well, the USDA report always moves prices. They're expecting maybe a little increase in corn acres, drop in bean acres, and maybe drop in wheat acres, especially spring wheat acres. But I think as soon as the numbers come out, the market will focus more on weather. As far as stocks are concerned, as of June 1, corn and beans should be up from a year ago. Wheat should be down. But the main thing is the corn stocks and who owns them. And because the basis has been extremely strong. In central Illinois, they're willing to pay 70 cents over the September to try to buy corn. Down in the feedlots in the Southern Plains, they're willing to pay $2 over the September contract. So I think a lot of people will be looking at that corn stocks number. And if it's down, it might have an impact, especially on the nearby spreads and basis.
Steve, here we are approaching the Independence Day weekend here in the U.S. What's the latest 30-day U.S. and world weather outlook and the potential impact on prices?
The latest information came out, and some of the weather meteorologists are talking about kind of a new normal, whether you blame it on climate change or whatever. But we could see temperatures at or slightly above normal for the next 30 days, and rainfall, not any soakers anywhere, but more scattered showers. So those maybe in the northern Corn Belt may fare out better than the southern Corn Belt. So it's one of those things where it's hard to buy it because it's not hot and dry, but it's also difficult to sell it because it's not perfect. But I think that the temperatures may not be hot enough to hurt the crops, and who gets the rain will see some pretty good crops.
Thank you both. Remember, the views and opinions expressed here today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.